Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid, such a sucker. Sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Cheers to a new trading day, retail trading team. I'm Mastro, and this is your routine briefing. So we're going to go ahead and jump right into it. The trading day has begun, so no need to talk too much about non-trading related activities. Really, is there ever a reason to talk about non-trading related activities during the work week? I don't think so, but if you are listening and in the chat, yeah, definitely give me your opinion around that. So it's Casual Friday, and we are casually already in a position which is nice. It has been a bit of tough trading for the past 2 weeks. So just to kind of review a little bit yesterday, major points, which you can see every day pre-market on Twitter, most days I should say, pre-market on Twitter, where you can find me at Routine Trader. Let's just kind of talk about first what happened yesterday, and then we will get into the goodness of today. So let me just make my little video thing a little smaller, and we'll get right to it. So go to the structure chart here. Turn the trading mode off so we can get a better look. Make sure that I didn't just close my position. Okay, so I just want to point out this false breakout yesterday. Very, very nice false breakout. In fact, let's look at it on a 4-hour chart. It's a little cleaner. So I'll put trade mode back on here. If you look at the lovely, lovely 4-hour chart. Agreed, Mr. Dale. Welcome to the chat. Thanks for coming to hang out here. What we got going on? What did they just do? We just rocketed it higher. Yep, looks like it. Okay, so just to discuss a little bit about what happened yesterday, let me move this out of the way here. Actually, I gotta go do that in the execution chart. Do not want to get stopped in this position, really in general, so get out of there. So if you look at that routine day trading document that I'm always talking about in the chat here, you can really see a good example of this in the tape action today. Let me see. So if you want to see this document yourself, it's in the description of the video along with that warm-up document that we'll go over shortly and all other resources. So I'm referring to this fourth picture here. It's the fourth picture in the corner here. And if you take a look at what happened yesterday, and obviously yesterday and it goes back a couple weeks of trading as well. So this would be that first peak, a little bit of a sell. This would be that second peak, a little bit of a sell, definitely imperfect relative to that picture. So if you look at this picture, you can see that you really want that valley to be a little deeper, yet in my opinion, and the opinion of technical analysis, it doesn't necessarily have to look like that as long as you do have that valley. And then you have that liquidity grab, which is that spike here, and that's what we saw yesterday, that liquidity grab, we popped it back up, and then we started to fall through. And if you were looking at the chart yesterday, this level here, this peak, was actually a gap in the SPY, so it was a perfect trade because we fell through the gap and we, as they say, I'm not sure if it was a gap and crap, maybe it was a gap and go, whatever the term is. We kept going right through it, and it really was one of those perfect supply grab trades there. So I just want to point that out. You can see that document again in the description of this video. I love those 4 patterns, and we got a really good example of it yesterday. So just want to talk about that real quick, and now let's talk about what we got going on today. A very interesting, albeit unsurprising, based on the market we're in, move overnight. So I got involved yesterday. The trade that I took was a reclaim of that 65 area. I took that in power hour, and then obviously we saw some continuation through. So I did get stopped out on that, and then we obviously, as they like to do, reclaimed it during Globex session and never looked back. So what we got going on today, and if you look at my bullet points that you'll see in the newsletter, which you can subscribe to at retailtrading.com if you're not already subscribed, you'll see my point here that we are currently already outside the expected move. The outlier level that we were talking about yesterday a lot today is about 46.13, which is why I am being very generous with my stops, getting them very much out of the way here. I do want to be short for this around this overnight high, at least for now, because that outlier level is at 46.13. So we're only 13 points away as we speak, and we're well outside that expected move again. So we've had a nearly 50-point rally from the low, most of that being during Globex, and we have not yet really had a pullback relative to that. So if you look at my bullet points, I think that's what I was talking about in the beginning here. You will see that I'm not too interested in the long side of things until we get a pullback today. I do like these short trades, and we'll see what happens. So this document here is going to kind of cover what happens with the open. I got to wait another 18 minutes. And that's, by the way, when we have some University of Michigan fun, some more news coming out to conclude what happens around that open. Yeah, you can see these SPY levels today. These are the main SPY levels I'm looking at, what I'm trading around, and keeping these expected move zones and outlier zones in mind as the day progresses. So in terms of the tape action itself, let's just do what we usually do. Start big and then get a little more granular. So big picture remains the same. We're outside balance. The top of that value area, at least overall balance, the outside of that value area is about 434 now. We're well above it. We're well above the trend lines. Yesterday we actually did have a near test of that October 13th trend line. On the daily chart, it looks like there was a test. So we'll go to that daily chart in a second. Yet, as it stands, bulls are in control. Big picture, we are well outside. We are well into imbalance land and above in La La Land, I would still say, and you can really see that on this daily chart here. We're well above this 4 standard deviation VWAP band. I've said a couple times. This is at least on a dollar, in terms of dollar amount, this is the farthest we've ever been extended from that band in history. At least I went back to the year 1998. So since 1998, I guess history is a little longer than that. Yet I couldn't find any dollar amount quite this extreme. I didn't check percentages, so it's possible that we have been, on a percentage basis, slightly more overextended. Yet there's no denying that we're well above anything that can be considered balance on the grand scheme of things here. So yesterday, like I said, it looks like we did get a minor test October 13th trend line. If we go back and just look at it here, we really should draw it. Let's actually fix that right now. Wick to wick, for those of you who are very specific about your technical analysis and doesn't want to pop right there, so stand by. Let's get it from wick to wick here. Okay, so we did actually pop a little bit below it yesterday. That's interesting. And so we are recovering it today. Perhaps that is one of the reasons beyond the strength of that bounce overnight. Obviously, we can't bounce intraday. That is not allowed when we are trending down, I guess. As my friend Juiceball would say, the algos were in control of that trend down, and that's kind of why we didn't get a bounce around that key level until aftermarket. Had to get some more liquidity, and then we've been moving up overnight since then. But interesting, I didn't realize that we actually popped below that slightly yesterday. Let's see if it shows the same on the weekly. I'll play with my trend lines later. So important thing is we did kind of pop below it and then we recovered. So be watching that trend line for today. That October 13th trend line in general is going to be super important going forward, and especially as we try to navigate the near-term tape action. So that's what we got going on the daily chart. Major levels again, you can see on that warm-up document in that SPY section. So besides that trend line itself, I think yesterday's low is really going to be the short-term trend pivot as long as we're moving higher. Relative to that level, the bulls are in complete control. So the bulls are in control really until I think at least 44.90-ish breaks. So that would correspond to about, let's say, 440-ish on the SPY. So bulls in control, definitely. Big picture, yeah, again, near term, short term, watching that low from yesterday, I see that kind of as a trend pivot. We start to get below that, we might see a little bit more of that corrective action. So this 443 level here, that is a gap that remains that downside magnet. If we do get any sustained selling, that is going to correspond to about 44.90ish on the ES, and that is going to be a really important level to investigate, watch as price tests it, if and when price does test it, if price ever tests it again. So that's what I'm looking at on the daily chart. TPO is a little bit messy. I don't really need to talk about too much about it today. Really hard to read. I think you can see all this emotion in the market denoted by those yellow horizontals. Those are singles on the TPO chart, which just represents a lot of emotional buying or selling. We got one single that we cleaned up from that overnight session. We got another that we didn't quite hit. You got some poor lows, or we got poor lows down here and a poor low there from the overnight session. And then again, like I said, all that junk above all those singles from yesterday. So really don't have an opinion of balance quite yet on the TPO. That's why I'm using yesterday's low as that pivot and just kind of watching what happens from there. So that is, I think, the big picture of things. One more chart that I think is worth mentioning, and finally, volatility is a little bit relevant again. So I've been talking about the 1620 level for a while now. Yesterday we did get a test of it once again, got a rejection once again, and now we're kind of watching what happens around this $15 level on that /VX, that volatility. So as it stands, looking for that potential bounce. You can see we broke out of the triangle. This triangle goes back to the very beginning of July, and we're going to watch and see if we can hold above. So as long as we're consolidating around it, I'm not really seeing anything too significant. We start to make that new low, pop back to the triangle, make a new low relative to yesterday. Well, I think we may continue that bull move higher. Yet if we do start to accept above 1620 and make higher highs in volatility here, we might just get more of a sell-off. So that's what I'm watching today. Again, you can see all those levels in that warm-up document, and I will send out the newsletter with a pretty picture of all my levels today, which will look something like this 4-hour chart here. So that's all I have for you. I'm going to go pop on Twitch, do the attempted DJ thing, and get that newsletter out ASAP. So if you like this video, please give it a like. That helps that YouTube algorithm. And please engage if you so desire. Critiques, criticisms, other comments, jokes. If you're Mr. Dale Perriman here, I appreciate any engagement, be it in the comment section of this video or on Twitter, which is once again at Routine Trader. So I thank you for your attention. I hope you have an excellent weekend and stay classy until Monday.